is the accounting role changing and what is becoming more important? This isn't particularly a new topic. We've seen lots of changes over the last few years, or the last decade in particular. Anyone remember accounts payable clerk being a title? You may still have accounts payable clerks in large businesses, but you certainly haven't in startups or scale-ups for quite some time. So today I wanted to go through what is kind of expected of you as a finance leader with the launch of AI, ChatGPT, not too long ago. It's only been a couple of years. We do see the introduction of new software. I will be going through my updated finance tech stack in September. I'll link the most recent one above and below. I update it every 6 months. I do feel that the role is changing at a rapid rate, and we just need to make sure that we also change so that we stay relevant, essentially. My name's Alysha Randall. I'm a fractional CFO for Fast Growth Consulting, and I also train new and aspiring CFOs within startups or scale-ups in particular. I wrote a book. I'm the author of the book Financial Leadership Fundamentals, How to Become a CFO in a Startup or Scale-Up, and I also run courses on this topic as well. The first, probably the most obvious one, is the increased focus on technology. So technology in accounting is becoming more prevalent. Many organizations all using cloud-based accounting systems. I haven't used non-cloud-based technology in a very long time, but it's pretty exciting with small businesses because you can do so much more with software. So as I said, I do go through a tech stack every 6 months, just because the additions or add-ons that you can use are always changing. I feel like I'm getting a workshop invite to some new software on a weekly basis, and no doubt the finance tech stack will continue evolving rapidly over the next 5 to 10 years as we see month end becoming simply a click of a button. So off the back of all of this additional increased software is a greater emphasis on data analysis. So the role of the accountant is kind of shifting from being primarily focused on historical data to analyzing data and providing insights to help make strategic decisions. So this includes analyzing data for cost control, for forecasting, identifying trends. And this is a huge change and should be a main focus for finance leaders. I would say that this change has been around for quite some time. It's just becoming more prevalent as the access to data is becoming more obvious. So there's a few things that you need to consider as a finance leader. The first one is a data strategy. So I did talk about this separately, and again, I'll leave a link for that. But you want to make sure that there is a data strategy within the business. Usually that falls on either the CFOs or CTO's shoulders. Often it's a collaboration. So if there is no data strategy within the business, I would recommend that you make that a priority, particularly early stage where things can move really quickly. Your business is probably pivoting quite a lot. There is a lot of data coming into the business, but there probably isn't a strategic way of managing it. So whether that's reconciliation, having one version of the truth, having a definition, making sure that it's housed properly, all those sort of topics can be tackled in a data strategy. So make sure that's on your to-do list if it's not already. The second thing actually is a bit more closer to the finance function, and that is how your team evolved. I would say early days, accounts payable clerk was probably one of your first hires. Now, often a finance manager is one of the first hires, and I would say that would be in conjunction with, or rather a finance analyst would be your second or first, depending on whether you have outsourced bookkeepers or not. So I used to always do a finance manager first. If you have a strong bookkeeping partner that can do all the way up to management accounts, then potentially you may want to consider hiring a finance analyst first and a finance manager second, or a financial controller second. I work now much more with a finance analyst than what I would with, say, a finance manager than ever before. So that is a big change, very specifically to the finance function, particularly at that, again, at that earlier stage where you are unfortunately doing quite a bit of spreadsheeting still. Particularly if you don't have good business intelligence team, there isn't a huge amount of resources available for that data management. You may still be using Excel probably until post the Series A. So this is obviously earlier stage. Post Series A, though, you're probably still doing a lot of spreadsheeting. So it's probably maybe a post Series B that you can start being a bit more, get some bigger tools in-house so that you're not spending your whole time on Excel. But yeah, really consider that finance analyst role as an early stage hire. Next up is increased compliance and regulatory requirements. So the accounting profession really is facing bigger and bigger and more compliance and regulatory requirements. If you've been in audit, you absolutely would agree with this. That has become much bigger. So whether it's complying with new financial reporting standards, increased use of technology, and providing real-time visibility of that financial report performance, I would say here in the UK GAAP is just about to go through changes, particularly around finance leases. So it's closer to IFRS. And if you have worked with leases before, finance and operating leases with IFRS, you know that there's quite a bit of calculations required in order to meet that standard. UK GAAP is now moving towards that. So unfortunately, with these increases, there's an increase workload for accountants to do that. No doubt software will take over it, but it's still having that thinking time, putting it all together and reviewing it. It takes a lot more man hours now than what it did before. Also, depending on which industry you're in, you'll also find some industries have even much more requirements, particularly fintech. I have fintech history, so I know post Lehman Brothers incident, the FCA requirements are massive and they will continue to grow as we start looking at things like cryptocurrencies, FX, macroeconomic factors. This is also going to really change the way that the role is. So even though AI is going to take over a lot of the role, on the flip side, things like regulatory requirements and compliance requirements are going to do the opposite. Off the back of that, there's also a greater focus on risk management. So as the business environment has become more difficult and also more complex, then the accounting profession and accounting leaders are expected to have a bigger, greater emphasis on risk management. So this includes identifying, managing risks associated with financial reporting, with tax compliance, and with fraud, particularly fraud. So even financial statements have higher requirements around risk management and disclosures. If you're early stage startup, you probably don't have a risk register yet. Again, like I was saying before, with the data strategy, risk register should be on your to-do list. It doesn't need to be overly complex. As a starting point, listing those risks and categorizing them as a low, medium, and high risk, and the likelihood of them happening at low, medium, and high as a starting point is a good way to start talking to the board around your risk register and what potentially could be a big risk to the business. Liquidity risk is generally the main one for startups and the biggest one with startups, just because of cash constraints. So everything else may be secondary to that, but still having that available. It also is quite useful for potential investors, and it shows that you're being a bit more strategic, particularly with, say, a Series A, Series B plus round. You're demonstrating that you are aware of the risks, and if you can take it further, what can you do to mitigate against those risks? Speaking of additional requirements, the other one is a greater emphasis on sustainability. So ESG reporting, obviously larger businesses are having to do that now. However, this does have a knock-on effect to startups and scale-ups. When I first went to workshops around ESG reporting, I confess I probably didn't spend enough time thinking about it, just because it is a requirement for large businesses. However, it was quite rightly pointed out to me in one of these sessions that if you want to be in the supply chain of a large business, you will also need to understand your ESG credits, requirements, what have you, because these large businesses will require them from the people that they work with. And if you aren't able to provide the information that they need, then they may look at one of your competitors. It's also something that venture capitalists will also be interested in when you're going into a fundraising round. So if you have some level of ESG reporting or tracking, this will only work to your favor. No doubt over time, this will also become a requirement for smaller businesses. So getting an understanding of what the requirements are, working about whether you can track them or not, it's a good starting point. And because it's often within financial reporting, no doubt this will fall to the CFO's role. So it is another thing that will be added to the CFO role, even though things will be coming away from it. And then finally, collaboration and communication. As a finance leader, this should always be a big part of your role, but it is becoming more collaborative and more communicative, particularly with founders who have an understanding of what finance leaders and CFOs can bring to the party. So working closely with departments, stakeholders, your AT, marketing, operations, and helping them make data-driven decisions is becoming more interesting for the business and therefore a requirement for finance leaders. You potentially might have been able to get away with not doing any of that 20 years ago, but you certainly can't anymore. If you want to be a strong finance leader, then you absolutely need to make sure that collaboration and communication is a big part of your day-to-day. So again, business partnership is not a new concept. The finance team definitely can't sit in the background as an introverted support function. You really do need to be part of the commercial and business making decisions. Again, talked about business partnerships and how you can introduce that into your company if you haven't done it strategically before, and I'll leave links above and below. So if you want to be a strong and confident and skilled finance leader within a startup or scale up, there are 3 steps to achieving that. The first one is to subscribe to this channel. I do videos every single Thursday, and so if you subscribe to that, you will get videos similar to this one every week, and it will help you move into that role again as a skilled and confident finance leader. The second one is to check out my book, Financial Leadership Fundamentals. Again, if you want to be a CFO within a startup or scale up, this is a great resource that can help you do that. And then the third one is to check out the Financial Leadership Fundamentals course, where we have monthly Q&A sessions with myself where everybody can ask me questions about how to apply everything they've learned to their specific situation, and also sometimes how to deal with certain problems. So we've created a support network, because sometimes being a CFO or a finance leader within a startup or scale up can be a bit lonely. So having somebody to bounce ideas off and other students also helping you in your role is very valuable. So I'll leave links to all of those below and check those out, and I look forward to seeing you next week. Cheers.